Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CAS Information Systems Inc. Annual Report. CAS Information Systems Inc. offers a wide range of services to various industries. The company's primary focus is on providing payment and information processing services to manufacturing, distribution, and retail enterprises in the United States. The company operates in two main segments: information services and banking services. Under Information Services, CAS provides freight invoice rating, payment processing, auditing, and accounting and transportation information generation. Additionally, it processes facility-related invoices such as electricity, gas, waste, and telecommunications expenses. CAS also offers telecom expense management solutions, church management software, and online generosity services for faith-based and nonprofit organizations. Furthermore, the company provides a range of banking products and services through its subsidiary, CAS Commercial Bank. These include demand, savings, time and money market deposits, commercial loans, industrial loans, commercial real estate loans, construction and land development loans, and cash management services. The company also offers a B2O billion payment platform for clients seeking an agile fintech partner. The stock price of CAS Information Systems Inc. has experienced a notable increase over the past year, rising by 24.5% as of February 26, 2026. Several key news events and financial announcements have contributed to this upward trend. One significant factor was the company's strong financial performance in 2025. CAS reported record annual net income and diluted earnings per share, EPS, of $35.1 million and $2.61, respectively, for the full year 2025. This included a 19.8% increase in net interest income and a raised dividend, which was a significant positive driver for the stock. The company's strategic moves have also been well received by investors. The sale of its telecom expense management business to Assignet in April 2025 was seen as a positive step towards streamlining operations. Additionally, the acquisition of the Aku audit platform from Acuitive Solutions in September 2025 expanded CAS service offerings and provided new opportunities for growth. Furthermore, several partnerships have been formed by CAS Information Systems Inc. that have contributed to its increased stock price. The partnership with FreightWaves Sonar in July 2025 integrated their systems for enhanced freight management, while the partnership with Caspian in February 2026 introduced a comprehensive tariff cost management solution for U.S. importers. Overall, these factors have combined to drive up CAS Information Systems Inc.'s stock price over the past year, making it an attractive investment opportunity for those looking to capitalize on its growth potential. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, effective management of capacity constraints, upgrades to systems and payments technology, and development of network architecture have contributed significantly to revenue increase. Additionally, increases in net interest income due to higher federal funds rates, growth in customer base for individual, corporate, and institutional banking services, and fee revenue and other income have also played a crucial role. Furthermore, the expansion of bank-owned life insurance and the rise in interest income have further boosted revenue growth. On the other hand, severe weather events, unfavorable developments concerning customer credit quality, and deterioration in economic conditions have led to revenue decline. The adoption and use of AI by competitors, interruptions or performance problems associated with network technology and infrastructure, and transportation invoice volume decrease have also negatively impacted revenue. The impact of changes in freight rates, oil and energy prices, and financial fees has also been significant, leading to a decline in revenue. Overall, the drivers of revenue growth or decline are complex and influenced by various internal and external factors, requiring careful management and strategic planning to mitigate risks and capitalize on opportunities. The net income of the company experienced significant growth over the years, with a notable increase of 83.2% from $19.2 million to $35.1 million in 2025. This surge was primarily driven by a 19.8% rise in net interest income and a 3.6% decrease in operating expenses. Additionally, the company's profit margins improved due to increased net interest income, with the net interest margin (NIM) rising from 3.25% in 2023 to 3.83% in 2025. The year-over-year comparison also showed a substantial increase in net income, from $28.5 million to $43.3 million, due to various factors such as an increase in amortization of intangible assets and depreciation, partially offset by lower net amortization of premium/discount on investment securities. The company's profit margins continued to improve, with the profit margin increasing from 34.6% in 2023 to 38.7% in 2025. The data also highlights a significant change in net income between 2024 and 2025, with an increase of 86%. This growth was accompanied by a substantial improvement in profit margins, with the company's profit margin rising from 21.1% in 2024 to 26.1% in 2025. Overall, the company's financial performance has shown a notable improvement over the years, driven by increased net interest income and improved profit margins. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the latest data, the company has achieved a significant milestone in terms of operating cash flow. In 2025, the net cash provided by operating activities reached a substantial $38,808, marking a positive trend. This achievement is a testament to the company's efficient management and effective operational strategies. The generation of positive operating cash flow suggests that the company is capable of covering its expenses and investing in growth initiatives without relying on external financing. This stability in cash flow provides a solid foundation for future success and allows the company to navigate potential challenges with confidence. The company's debt level has experienced a moderate increase over the past year. According to the extracted summaries, the debt level rose from $2,097,526 in 2024 to $2,324,891 in 2025. This represents an increase of approximately $227,365. In terms of interest expenses, there is a notable decrease observed across various reports. The interest expense decreased from $20,258 in 2024 to $16,326 in 2025, indicating a reduction of around $3,932. Additionally, other reports show significant decreases in interest expenses, with one report stating a drop from $28,029,000 in 2023 to $16,266,000 in 2025. Overall, while the company's debt level has increased slightly, its interest expenses have decreased significantly over the past year. The company's performance can be analyzed through its various segments and regions. On a positive note, the transportation segment saw a significant increase in dollar volumes due to tariffs, resulting in a $600 million boost. Additionally, the facilities expense management business unit excelled as one of the largest providers of utility information processing and payment services. The Transportation Information Services business unit also performed well in the transportation bill processing and payment industry. On the other hand, some segments struggled. The Telecom Expense Management and Managed Mobility Services (TEM) business was sold to Assignet USA Inc., indicating a decline in performance. Furthermore, the Information Services operating segment underperformed due to the sale of the TEM business unit. These areas require attention to improve overall company performance. Management's outlook for the company is optimistic, with a focus on expansion and growth. They see opportunities in expanding their payment and information processing services to new customers, which will drive revenue and earnings growth. To achieve this goal, management plans to leverage existing systems and facilities, while also exploring new business opportunities. In terms of financial strategy, management aims to optimize the mix of fees and net interest income, while minimizing exposure to changing interest rates. This is achieved through a combination of fee-based services and careful management of interest rate risk. The company's focus on acquiring and managing data, information delivery, and financial exchange services will also contribute to revenue growth. Management has identified two key reportable segments: information services and banking services. These distinct services will enable the company to provide tailored solutions to its customers, while also driving efficiency and profitability. Overall, management is confident in the company's ability to deliver strong earnings growth and maintain a stable financial position. The company has a long history of rewarding its shareholders through dividend payments. Since 1934, it has consistently paid regular cash dividends, demonstrating its commitment to returning value to its investors. In recent years, the company has continued this tradition, with a notable payment of $16.5 million in 2025. In addition to paying dividends, the company has also been actively buying back shares through its treasury stock buyback program. Approved by the board of directors in November 2025, this program allows the company to repurchase shares from the market, reducing the outstanding share count and potentially increasing earnings per share for existing shareholders. In 2025 alone, the company repurchased a total of 784,870 shares at an aggregate cost of $33.2 million. Concerns about inventory buildup or supply chain disruption are indeed present in the current market. One major factor contributing to these concerns is the recent U.S. trade policies and practices, as mentioned on page 23. These policies have created uncertainty and instability in global trade, leading to potential disruptions in the supply chain. Furthermore, off-balance sheet risk also poses a significant threat to the supply chain. As highlighted on page 82, commitments to extend credit and letters of credit can have a ripple effect throughout the entire supply chain, potentially impacting inventory levels and overall efficiency. These risks are often hidden from view, but can have far-reaching consequences if not managed properly. That concludes the financial summary for CAS Information Systems Inc. Feel free to comment below, and I will be happy to answer them when possible.